So dear student, welcome to MCQ on Ind As 32, and please you will also participate. Check how much you have understood. The set of MCQs will complete your quick revision of this chapter Ind As 32 financial instrument presentation. So here is my question number 1. Please answer question number 1. Are there any circumstances when a contract that is not a financial instrument would be accounted for as a financial instrument under Ind As 32 and Ind As 109? A contract for non-financial instrument, can it be covered by Ind As 32 or Ind As 109? So read the option and tell me what is the answer. First, option A says only financial instruments are accounted for as financial instrument. This is not correct. Yes, gold, silver and other precious metal that are readily convertible to cash are accounted as financial instrument. This is not correct. Point C says yes, a contract for future purchase or delivery of commodity or other non-financial item like gold, silver, electricity, gas generally is accounted for as a financial instrument if the contract can be settled net. This seems to be the right answer. And point number D says that yes, an entity may designate any non-financial asset that may be readily convertible to cash or a financial instrument. There is no such scope in this standard, that is students Ind As. So some students, Ajit, have given right answer, Minal right answer. Okay, everybody should reply. Tick mark C. Very good question. Now we'll go to question number 2. Which of the following is not a financial asset? Come on, try. Not a financial asset. Not a financial asset. Cash is a financial asset. Equity instrument is a financial asset. A contract that may or will be settled in entity's own equity instrument. And the last one, prepaid expense. Is prepaid expense a financial asset? Prepaid expense, is a prepaid expense a financial asset? This can be a financial asset. Contract that will or may be settled in entity's own equity instrument. Okay, this can be a financial asset. Prepaid expense is not a financial asset because it is not a contractual right to receive cash or other financial asset. It's a contractual right to receive service or other asset, not cash or other financial asset. So the answer was T. Prepaid expenses are not financial asset. Okay, now the student will try question number 3. Which of the following liabilities is a financial liability? And keep a count on how many answers you have got right. Keep a count. Later on we'll see who got maximum marks. Which of the following liability is a financial liability? Deferred revenue, warranty obligation, constructive obligation. Point number D, an obligation to deliver. In your book there is a small typing mistake. Contract to deliver variable number of own shares worth a fixed amount of cash. So which do you think is the financial liability? All of you have answered D, that is correct. Answer D, contract to deliver variable number of own equity share. Very good, Vima Reddy. Keep trying. Question number 4, another good question. Which of the following statements best describes the principle for classifying an issued financial instrument as either a financial liability or equity? Think and answer. I'll wait for you. I'm waiting for your answer. All the students are saying option A is right. Instrument should be classified as equity or liability in accordance with the substance of the contractual arrangement. Seems to be right, so I will keep it on hold. Issued instruments are classified as liability or equity as per legal form. No, we don't have to look at legal form. Instruments are classified as liability or equity in accordance with management's designation. This is students' way of Ind As. Okay. Issued instruments are classified as liability or equity in accordance with the risk and reward of the contractual arrangement. This is totally imaginary statement. So the answer was A. A is the right answer. Tick mark A. Keep the score with you. Question number 5. Which of the following instrument would not be classified as financial liability? Would not be classified as financial liability. You will read it and then we'll check. Which of them is not financial liability? Many students have replied C. C is the right answer because a return call option that gives the holder the right to purchase a fixed number of share against a fixed price. If fixed for fixed test is passed, it is an equity instrument. In other 3 cases, it is a financial liability. There is an obligation to pay cash here, and there is an obligation to issue variable number of own share. A, B and D are financial liabilities. C is an equity instrument. So tick mark option C. Question number 6. What is the principle of accounting for a compound instrument? So you will read the options and you will try. Then I will explain. What is the principle of accounting for a compound instrument? All the students are saying B. B is the right answer. The issuer shall classify the liability and equity component of a compound instrument separately as financial liability and equity instrument. Why others are wrong? Let us see. The issuer shall classify a compound instrument as either a liability or equity. Either as a liability or equity. There is no such choice based on an evaluation of the predominant characteristics of the contractual arrangement. This is wrong. The issuer shall classify a compound instrument as a liability in its entirety until converted into equity, unless the equity instrument is detachable and separately transferable, in which case the liability and equity will be presented separately. No, there is no such condition of detachability and separately transferable. This is imagination only. The issuer shall classify a compound instrument as a liability in its entirety unless converted into equity. This is your intermediate classification. Final classification is you have to bifurcate into the liability and the equity portion. Question number 7. First read the question and solve yourself. Then we will discuss why some answer is right and why some answer is wrong. Yes, please. The answer given by all the students is A. Let me check. How are the proceeds from issuing a compound instrument allocated in the liability and equity component? First you have to calculate the liability at fair value. Remainder amount will be allocated to equity. Seems to be right. I'll hold it, but we have to read other options also. First, the equity component is measured at fair value. Wrong. I will not read further. First, equity cannot be measured. First, you have to measure liability. First, the fair value of both equity and liability are estimated and then allocated in the ratio of fair value. Wrong. You don't have to allocate in the ratio of fair value. You have to first value liability. Equity is the residual component. And point D, the equity component is measured at intrinsic value. Wrong. There is no such concept as intrinsic value in this standard only. Answer A was right. One more question. Please participate and see whether you have understood Ind As 32. What are the conditions for offsetting or net presentation of financial asset and financial liability? When we can set off financial asset and financial liability? First, it says there is a legal right to set off. This is partially correct. Legal right to set off and an intention to settle net or simultaneously. This is right. So many students have given this answer as right. B, the existence of a clearing mechanism or other market mechanism for net settlement and an expectation of net settlement. I don't know from where they have got this idea of clearing mechanism or market mechanism. Ram has to pay to Shyam, Shyam has to pay to Ram. Why we need a clearing mechanism? Students Ind As. A netting agreement and an expectation of net settlement. Okay, we don't require a netting agreement. There must be intention to settle net and legal right to set off. So option B is right. Option B was right. Check the answer. Option B is right. These 8 questions are nothing but a small summary of this whole standard Ind As 32. So that was about MCQ. Please join the YouTube channel AS Foundation. We are going to upload all MCQs for other chapters also. Thank you very much.